Welcome to the deep dive. Today, we're plunging into Bitcoin. You might feel like it's not dominating headlines as much these days, or maybe, the daily price isn't grabbing attention like it used to. Maybe you even feel a bit disconnected.
And that's exactly where the paradox lies, isn't it? While general public interest might seem maybe surprisingly low right now,
Yeah?
institutional activity in Bitcoin is actually at an all-time high. It's a really fascinating disconnect.
Okay, right. Let's unpack this then. What's truly going on behind the scenes with Bitcoin right now?
Well, to start, we're seeing massive institutional money flowing in, just huge amounts.
How much are we talking?
We're talking approximately $45 to $50 billion pouring into Bitcoin-related ETFs.
50 billion. Wow.
Yeah, and this isn't just about the price. It's more about a fundamental reclassification. They're starting to see Bitcoin as a strategic digital gold asset.
Right, the part of a serious portfolio.
Exactly. It's a shift few in the general public maybe recognize yet. Some analysts are even predicting a further 20 to 45% increase.
Pushing the price up to.
Potentially, yeah, pushing it to $143,000 or maybe even $200,000 within about a year.
That scale is incredible. And you mentioned the ETFs like BlackRock's. They're buying thousands of Bitcoin daily. Could you put that into perspective for us? Like, how does that compare to new supply?
Right, good question. So BlackRock's ETF alone is reportedly buying something like 2,000 to 3,000 Bitcoin every single day.
Okay.
Now, compare that to the daily production of new Bitcoin, which is only about 450 BTC.
So they're buying 5 to 8 times what's being mined each day.
Precisely. And it's not just the ETFs. We're also seeing, established corporations strategically accumulating Bitcoin.
Like Strategy, formerly MicroStrategy, they're always in the news for this.
They're leading the charge, yeah. They recently made another significant purchase, brings their total holdings now to over 597,000 Bitcoin.
597,000.
Yep, which represents roughly 3% of the total circulating supply.
Wow, that's a huge chunk for one company.
It really is, and it signals this shift in how corporations are managing their treasuries, sort of inflation-proofing their balance sheets. You're seeing other companies like Metaplan, BitMax, starting to follow this Bitcoin treasury strategy. It's like a corporate FOMO, but driven by long-term strategic thinking.
That's a profound shift. Who's actually holding it?
Yeah.
But beyond these, direct purchases, how does Bitcoin's performance fit into the wider market trends we're seeing?
Yeah, it connects directly to this broader macroeconomic shift towards what we call risk-on assets.
Meaning investors are feeling a bit more adventurous.
Exactly. They're moving capital into investments with higher growth potential, maybe with a bit more perceived risk because the economic outlook seems to be improving. We saw this in June, right?
Yeah.
Traditional safe havens like gold basically stayed flat, but stock markets, NASDAQ, S&P 500, they surged. And notably, Bitcoin also gained ground.
So it's playing in that higher growth category now for the big money.
It seems so. Think of liquidity like water flowing through a system. It's currently strong in the stock markets, the midstream, you could say. And the expectation is it'll reach cryptocurrencies, the downstream, as some of these global uncertainties start to resolve.
Okay, that makes sense. But what about regulations? How significant is the regulatory side of things in, attracting this institutional money?
Hugely significant. The stablecoin bill, the Genius Act passing in the U.S., that's a very positive sign.
Why specifically stablecoins?
Because they're crucial as a bridge, right, between traditional finance and crypto. So having clear rules just reduces uncertainty for these big institutional players. It builds trust, supports the whole investment feeling for crypto, including Bitcoin.
Let's talk numbers for a sec. Bitcoin's price now is around $108,263. It's been bouncing between, $107K and $111K recently. What are the key technical levels you're watching?
Okay, technically, there's significant resistance, a ceiling, at around $114,000. If it breaks through that convincingly, could trigger maybe a 25% rally.
And on the downside, support.
Strong support seems to be between $100,000 and $103,000. That's a key zone to hold.
Oh, and historically, July tends to be a pretty decent month for Bitcoin, for what that's worth.
Interesting. And then there's this intriguing news about whales moving coins, these really old wallets from 2011.
Yeah, 2 wallets, each moving 10,000 Bitcoin, worth over $1 billion now.
Does that kind of thing, huge amounts controlled by a few, add risk?
It can certainly create awareness, even if it doesn't directly move the price immediately. But what's really fascinating here, again, is the disconnect. You have institutions buying aggressively,
Right.
but public interest Google Trends, social media buzz, it's near zero.
So how are the institutions buying without spiking the price if public interest is low?
Well, they often buy in private off-exchange deals. They're called OTC block trades. Big chunks bought directly, away from the public market.
To avoid attention.
Exactly. And
Yeah.
sometimes they might even use short positions in the futures market, basically betting the price goes down short term.
To create a bit of artificial selling pressure, it can shake out or discourage, individual investors, make them sell maybe. Then the institutions can scoop up more Bitcoin at slightly lower prices. It's a strategy.
So they suppress the price while they accumulate.
It looks that way sometimes, and it's worked, apparently. Institutional holdings have reportedly gone from under 10% to over 30% just this cycle.
That quiet accumulation is, wow. Okay, stepping back, what about the bigger picture, microeconomic stuff?
Well, initially we had some positive U.S. job data, but that got a bit overshadowed by U.S.-China tariff risks. We kind of see that as maybe a peak of uncertainty right now.
So if that resolves.
Could clear the path forward, yeah. We also expect U.S. employment data to slowly weaken a bit. Non-farm payrolls, maybe around 110K. Unemployment ticking up to 4.3%.
And why does that matter for Bitcoin?
Because a cooling job market could give the Federal Reserve the justification it needs to start cutting interest rates later this year, maybe even 3 times.
Lower rates usually means more money slowing around, right?
Exactly. Plus, you've got political pressure on the Fed and talk of potential U.S. tax cuts, maybe $3 to $5 trillion worth. All of that boosts liquidity, and crucially, it weakens the dollar.
The dollar relationship.
Yes. A weaker dollar, maybe the dollar index dropping towards 90 from below 97 now, is historically a major positive for Bitcoin. They're like opposite sides of the liquidity coin.
Okay, so summing up, we've got strong institutional buying, very low retail buzz, and a market that seems kind of poised for big shifts in liquidity based on macro factors.
That's pretty much it. Short term, probably expect more sideways trading, maybe between $108,000 and $114,000, but medium to long term, there's significant upside potential, and like I said, $143K, maybe even $200K, driven by those institutions and clearer regulations.
So what does all this mean for you listening? Maybe, just maybe, the greatest opportunities pop up when everyone else isn't really looking.